Hello, everybody, and welcome to another Three Money Amigos podcast. Today we're doing a tax season write up, and on the title you may see unwrapping the numbers, but it's more of a wrap up, just talking about the season as a whole. Now you will notice there are 2/3 of the Three Money Amigos here with you. I'll start my intro. I am Brent Simpson, co-founder of Investing Education Academy, along with Leon Noble. And if you're interested in learning how to invest in the stock market, a lot of people right now are kind of having a rebirth of interest in investing in the stock market. So that's awesome. We are happy to teach you. If you've been looking at how to get into private equity deals, real estate deals, you can come learn with us because some of those things we experience with, some of the things are new to us as well. So we welcome you to go to www.ieanow.com and you can find us. Joy.
I am Joy Sistrunk of Premier Group. We are a CPA firm in the Washington, D.C. area. We work with businesses and nonprofits and government contractors on their taxes, their audits, all of your compliance and back office needs.
All right. And we are missing attorney Beverly Winstead. And she can be reached at www.irshelpattorneys.com. This has been a very busy season for all of us. So we are making sure we can do our best to show up. So let's jump in. How did you handle this tax season? Was it Go
It
ahead.
was more chaotic, I think, this year. For whatever reason, I think this is our first year coming out of the pandemic. So it's almost like people filed their extensions in April. And even though we've been saying, hey, we're sending reminders and emails and in some cases even phone calls, there were lots of people who did not get their documents until extremely late this year, which caused a backup. Because then, unfortunately, that creates problems because it's becomes harder to touch each person physically and have conversations and help you review your returns one on one when it's so late in the season because time is not on our side in those instances. So yeah, it was kind of towards the end. It got really really tight. It seemed like everybody's busy, so that seemed to be the excuse. And unfortunately, there's been deaths in people's family, and just life has been life. And so
Yeah.
we understand that, but at the same time, the deadline didn't really change. This is the same every single year.
Yeah.
So,
And as business owners, that's something we have to take into account is the what if factors, the things that you can. We should assume as business owners, homeowners, people in relationships, really anything, that whatever you think is going to be smooth sailing is not.
it's not ever.
And the more you can prepare, the better it is. Also, too, it's not just about preparation; it's about treating our service providers well. Often as consumers, and I'm gonna put myself on consumer because not only does Joy but Beverly consults me. Um, it's easy for us to forget that they have other clients, and it's easy for us to forget that they have their own lives on top of having other clients. And the same thing we just said, assume things will go wrong. Their lives are not rosy all the time,
No.
and we just assume that because they own the company, they'll always just be ready as soon as we say go. It's not fair. But also, now, what do they do next year? Like, what are some things people can start to do this year for next year?
So they can start preparing, looking at the things that you're doing now, because we had people that were in certain situations, so that they maybe didn't even tell us. Like people got married and didn't tell us, or had children and didn't tell us until the very last second, which changes the course of your returns. You can start gathering your information, and actually, you really should be talking to. If you filed late most of the time, it's because you think you're going to owe, and because you think you're going to owe, you probably should be talking to us now, because now between now and actually was thinking about it yesterday and today, it's only 44 days to the end of the year. It's October 17th, so we got to
Wow.
put it in perspective. It's only 44 days to the end of the year, so really we need to be doing some tax planning now, between now and probably Christmas, because most people shut down right after Christmas, to figure out how to get you to owe less money. So you should be contacting your CPA, your EA, or your tax attorney to say, hey, I owed way more than I'm comfortable with owing, or I'd like to owe. What are some strategies I can do now while we're still in this year to help me not to owe so much next year, so that then I'll be prepared to file earlier?
In tax planning, I'm telling you all, for those of you all who have companies and also individuals who are listening to this, don't think, oh, well, I know I don't have much. That is the purpose of planning, to confirm your thoughts. It's not to say you're wrong. It's not to say you're right. It's just to confirm whatever it is you might believe, or to uncover the truth. Let me actually change that statement. The purpose of planning is to uncover the truth. And so we get into our heads, and I'm talking as us, and we're going to say Bev and Joy are them. And so, you know, when we go into this place of getting our taxes ready, easily, we can think we know. We've been
Mm-hmm.
doing our taxes every year. It's always about the same. Nothing's changed. Therefore, I have no reason to inquire from a professional. That is wrong because even when your situation doesn't change, the laws may change.
Yep. The laws
And
change. And most people's situation does change. All it takes is, God forbid, you lose somebody and you wind up getting a property from your parents and now you have a rental property. Or you have, life is happening so quickly. You've changed jobs. Your salary went up. It went down. You aren't going to the same church you were going to, or you're moving from one place to another, even though interest rates are really high. So I'm not sure who's moving at this point, but things are happening that, or even in that, you may have had a multiple properties and unfortunately may have had to foreclose on some because the
Mhm.
interest rates are higher, or you had to refinance, or things. So much happens that nothing really from year to year is exactly the same.
Yeah, and to that point, it's not even maybe it didn't change, but the way you categorize it needs to change.
Exactly.
And so that's part of the planning process. Categorizing and capturing loss. Let's talk about the stock market for a minute.
Perfect.
That's Leon in our space. Sometimes people think, oh, it's been a down year. I just have to wait for the market to recover. No, sometimes you want to actually do what's called loss capturing.
Hmm.
And you want to sell those while they're depressed because it's going to offset some of your income somewhere else. So those are tax planning type strategies. And then also, if you bought it, like understanding what was your cost basis, because you actually been dollar cost averaging, like over the year, you've been buying more and more and more, and you really don't know how to calculate properly your own dollar cost average, your average.
Hmm.
It's what's called your cost basis, but we're gonna keep it light.
Hmm.
So these things, if you had to in your 401k, in your 403b at work, in your 457 plan, in your Keo, in your profit sharing, maybe you took out some money this year
Exactly. They do that.
and you don't think of it as being a tax triggering event, but maybe it is. However, you didn't tell us you took it out for higher education,
Right.
so that might be an exemption. And these are things that if you go into your own head, and I am raising my hand, I have done it, we have done it, and they have helped me because they're the day today, y'all. Everybody, they're they. And so, I made decisions, and I thought I knew what I was doing, and it seemed so easy and common sense that I didn't even think to ask. And these are people who are on my team I talk to regularly, and they tell me everything I do wrong or right, and I just didn't think to tell them some of the stuff.
Right.
So I know the everyday person out there, you're going through life and you're just doing what you think is right. Professionals like Joy. And Joy, can you tell us any time where somebody's come in just shoulder square, chin up, just knowing they were right, and you were like, if you would have done this earlier.
Yeah, I can give my one of my classic examples is
No,
I have.
excluding names.
No, no,
Excluding
no,
names.
of course.
Okay. Yeah.
We can't do that. No,
Yeah,
no.
yeah. Okay. All right.
No. But we had a client probably about, now it was before the pandemic, so a couple years ago. They actually took $500,000 out of their 401k because they wanted to be debt free. And what happened was, once they took the money out, you're paying 20 cents on the dollar because they weren't 55. And so they wound up owing on that $500,000. They were debt free from a perspective. They paid off their house, paid off their credit cards, their car. They had no debt, which meant they had no tax deductions. And then because they took money out of their 401k and they weren't 55, they wound up with a $125,000 federal tax bill, and then a state tax bill, let's call it another $50,000. So they couldn't be debt free. They just now changed who they owed the money to, and they couldn't claim any of it. So had we sat down and talked about that beforehand, we would have told that person that that wasn't a good idea and maybe pay it off in a different way. The goal of being debt free is great, but I heard somebody say something recently, and I believe that is true. You never hear rich people or wealthy people talk about being debt free. Do you know why? Because they want all the tax deductions and they
Mm-hmm.
want to use other people's money. They just want to make sure they're minimizing what it costs them.
Mm-hmm. And that goes to the opportunity cost. We're looking at okay, and I'm not throwing shade, but I am going to use names. You might be listening to the Susie Ormans and Dave Ramseys of the world, and they're preaching this debt free, debt free, debt free. And I promise you, they are highly leveraged individuals
They
because I know people in their circles. And so, when you look at and they preach it because they know it's clickbait.
are popular. It's
Yeah.
popular.
People will absolutely hear it and go, yeah, I need to get there too. But
Mhm.
if you eliminate your house, that's some people's biggest deduction.
It is.
And what happens is you eliminate that and then you start paying for things with a credit card or you start paying things other
Mhm.
ways when maybe you could have done an equity line of credit and kept it floating. But now you went and got this debt-free situation and you paid off a debt that cost you 3%.
Right.
Because a lot of people who bought houses between 2012 to like that 2020 range, 2019,
2021, maybe.
yeah, like 2021, you slid in.
You
Like you were like
in
safe.
the Yep. Barely.
Yeah, barely. And you slid in, but you have these debts that are 2% to 4%, 5% maybe. And then you exchange them for what Joy just gave that scenario.
It's
You're
like
looking
eight.
at
Yeah. 20%.
20%, and then you still got the early disbursement penalty for the 10% early
Yeah.
disbursement from our retirement account.
Yeah.
And so that's on top of everything else. So you just exchange a 4 or 5% debt for a 20 to 30% hit on the federal and state side tax wise because you didn't plan. But it seemed like a really good thing to do because you were driving from here to North Carolina, listening to Dave Ramsey to Peace University. So I'm not bad, Dave. If you're listening, I'm not mad at you. I get it, but it's not for everybody. That process, that situation is not for everybody. And Susie, I get it, but you gave up your CFP because you wanted to be able to talk freely because the board wouldn't allow you to say that.
Right.
And so these are things that you have to understand where information is coming from. Please, we're not saying that we're the end all be all 3 Money Amigos,
Mhm.
but we've been doing this for a while, and we do know you guys are riding around thinking, okay, I have all day to file my taxes. All year to file my taxes. You know what? I'm not going to worry about looking at everything until it's like 2 weeks in, and sometimes it's just scary. And sometimes we think, oh, well, it's going to cost a lot of money. I promise you, the person who got that bill for or was going to get that bill from the Fed for $125,000 or more, and then going to get another bill from state of like 20,000 or more, it would have cost far less than $20,000 to sit down and have a tax advisory session, and to have maybe 2 sessions to say that doesn't make the most sense, and this is why. It would have all been avoided. You still would have had, and we're not even talking about the fact they lost their deductions.
Yeah. Exactly.
So deductions are lost on top of that. So, as we wrap up this season, we think it's really important that all people, you start planning for what you want in 2024 right now, because depending on how elections shake out and all the things, tax laws will change again.
They are. They're going to change soon. The next
Mm-hmm.
president is going to determine what the new set of laws look like, basically.
And so if your situation has stayed the same, that does not mean how you file should necessarily stay the same.
Absolutely.
You have to track the law. You have to understand, the effects of just everyday actions that you may not think matter. You might have CDs coming due. You might have got a life insurance payout. I mean, it's a lot of things that can happen, and you think it has no really impact on you, and it might not, but it might. Meet with professionals. So if they were trying to get in touch with you, Joy, how would they do so?
Sure. They would reach us at www.pgs-cpa.com or give us a call at 301-577-6444.
All right. And if you're looking for tax attorney Beverly Winstead, you can go to www.irshelpattorneys.com and get in touch with her, set an appointment, spend some time there. It makes sense. And if you're saving all this money with these people and you're like, you know what, how do I invest it? You can come to Investing Education Academy. Again, my name is Brent Simpson. I'm the co-founder of Investing Education Academy along with Leon Noble. We're happy to, be that introduction to the stock market. And if you're already in the stock market, but you want to learn new ways to invest, please get in contact with us and we can show you some new ways, or give our opinion at least on what we think is viable for most people. So thank you for being with the 3 Money Amigos, and we will see you all next week. All right.